So, are you unsure if your accountant is actually a licensed CPA in Indiana? Well, in this explainer, you'll discover everything you need to know to verify their credentials legally and effectively.
Because look, confirming a license, it's not just some bureaucratic formality. It's a literally critical consumer protection measure. I mean, you're handing over your financial future to someone, right? You need absolute 100% certainty that they're fully qualified to handle it.
To get that certainty, we've got to figure out who's actually in charge. Enter the Indiana Professional Licensing Agency, or the IPLA for short. They oversee professional credentials across the entire state, and operating right under their umbrella is the specific group looking out for you, the Indiana Board of Accountancy. They're the ones setting the rules, tracking the data, and most importantly, enforcing the standards.
Now let's lay down some foundation. What actually is a CPA, and why is that specific license so crucial for trust? Well, Certified Public Accountant is a highly protected title. Literally anyone can slap accountant or tax preparer on their business card, but you cannot legally call yourself a CPA in Indiana unless you've met some incredibly rigorous educational, exam, and experience requirements mandated by the state. To put that into perspective, just think about the sheer weight of this credential. Earning that title in Indiana means knocking out 150 college credit hours. Then, you've got to pass the grueling 4-part uniform CPA exam, which covers auditing, taxation, the whole shebang. Plus, you need a full year of professional experience. And get this, that experience has to be officially verified by a current CPA. So, when you verify a license, you're really confirming that your professional has successfully survived this exact gauntlet.
All right, let's move into Section 1, our step-by-step verification guide.
So now that we know what's at stake, let's get into the practical, nitty-gritty steps of actually looking up your accountant. The best part? The process is completely free. No login, no account creation required. You just navigate over to the IPLA e-verification portal, that's mylicense.ingi.gov/e-verification. Once you're there, just click the profession dropdown, choose the accountancy board, and punch in your CPA's details. You can use their first and last name or their exact license number if you happen to have it handy. And a quick tip, the state updates these records in real time. That means routine renewals and new licenses pop up on the exact same day they're processed.
Now, here's an absolutely crucial point. You have to know the difference between searching for a solo accountant and an entire agency. If you're looking up a specific person, you just use that standard search layout we just talked about. But if you want to vet an entire CPA firm or a corporate entity, you need to toggle over to the Facilities Search option on the portal. From there, you can search by their corporate name, their doing business as name, or even filter it down by county.
Moving right along to Section 2, decoding the search results.
Okay, once you actually hit search, you're going to get a whole lot of data thrown back at you. It can honestly be a little overwhelming if you don't know what you're looking at. So let's decode these specific license statuses. If the status says active, awesome. They are fully authorized to practice public accountancy. If it says inactive or expired, well, they are not currently authorized to practice. And if you see words like suspended or probation, those are massive red flags. It means disciplinary action has been taken by the board. Bottom line, never ever sign an agreement with someone holding an expired or suspended license.
But wait a second, here is a hidden trap you really need to watch out for. Ask yourself, is an active status always a totally clean bill of health? Naturally, you'd think, yeah, of course. Actually, scratch that. An active status doesn't automatically mean your accountant is completely in the clear. And the reason why comes down to a very specific timeline cooked into state law.
That number is 90. See, according to Indiana state law, the Board of Accountancy has up to 90 days to issue a final written order on any disciplinary action. What does that mean for you? It means there's a really dangerous administrative gap. A penalized CPA might still show up as completely active and in good standing on the primary portal during that 90-day window, right before the final order actually hits their public record.
So, how do you protect yourself during that 90-day gap? You must cross-reference their name in the IPLA Litigation Search Portal. This is a totally separate database that lists all disciplinary actions taken within those previous 90 days, even before they're finalized. Checking this second portal is literally the only way to ensure you aren't accidentally hiring someone who got penalized just last week but hasn't had their main profile updated yet.
All right, let's wrap things up with Section 3, pitfalls and additional resources. Let's talk about some common mistakes folks make during this process and some pro tips to help you bypass them like a pro. First trick of the trade, if you aren't exactly sure how to spell a complex last name, just use an asterisk as a wildcard search trick. For example, searching AL** is going to bring up Alan, Albert, you name it.
Second, don't hit the panic button immediately if expired pops up. Sometimes it's literally just a minor administrative delay with their renewal paperwork. Just ask them about it. And finally, remember you can also check professional associations, like the Indiana CPA Society, or INCPAS, for independent ethical violations. They actually publish those online for up to 7 years.
Here's another major pitfall: confusing a professional license with a company's corporate standing. It's like comparing apples and oranges. An individual's professional license is managed by the IPLA, but a CPA firm's corporate good standing, like if they're an LLC or a professional corporation, has to be verified entirely separately through the Indiana Secretary of State. A truly trustworthy firm needs to be in good standing with both of those entities, for sure.
Now, what if your accountant isn't even from Indiana? Well, Indiana adopted what they call mobility laws. These essentially allow qualifying out-of-state CPAs to practice in Indiana without having to jump through hoops to get a reciprocal license. So if your accountant is licensed out of state but practicing in Indiana under these laws, you can easily verify their credentials on a national level using cpaverify.org, which aggregates data from over 50 different jurisdictions.
Okay, let's bring it all together. Here is your definitive consumer protection checklist. First, always remember to verify both the individual practitioner and the firm itself. Second, check that IPLA litigation portal to bypass that 90-day reporting gap we just talked about. Third, confirm that the firm actually holds an active permit to practice. And lastly, always audit any out-of-state credentials using those national databases. A quick but very important heads up before we go. While this explainer provides general guidance based on official state regulatory sources, you should absolutely always consult directly with the Indiana Board of Accountancy or your own legal counsel for the most current and specific advice regarding your own unique financial situation.
I'm going to leave you with this final thought to chew on before you sign your next financial agreement. When was the last time you truly verified the person handling your financial future? Seriously, don't leave your hard-earned money to chance. Take the tools we've explored today, do your due diligence, and take active, confident control of your financial security.